In recent months, the Federal Reserve, the Fed, finally admitted to some harsh realities regarding the economy. Although they've made some juicy and meaty statements, the truth is, their warnings have been overlooked or gone over the heads of many Americans. The information revealed by the Fed will impact those seeking jobs, buying homes, and purchasing goods. Unfortunately, the outlook is pessimistic at best, and the economic situation looks to be a bumpy ride. First and foremost, the Fed admitted that although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be a bumpy ride. This statement alone should cause alarm bells to go off for the average American. While many may assume that the recent slowdown in inflation means that prices will remain stable or decrease, the Fed warns that this is not the case. Inflation remains high, and it is unlikely to come down to a sustainable level anytime soon. But, before we get started, are you worried about the status of the American economy? Do you want to stay ahead of the curve and make informed decisions? Look no further than Market Meltdown TV. Our channel gives you the true information on real estate, the stock market, economy, politics and more. To help you navigate the upcoming recession or even worse, depression. Our brief, unbiased updates uncover everything the mainstream media doesn't, so please help us spread the truth to our nation by hitting the subscribe button, giving us a thumbs up, and sharing with your fellow Americans to join the Market Meltdown TV community today. Now, to the meltdown. Furthermore, the latest economic data has come in stronger than expected, suggesting that the ultimate level of interest rates is likely to be higher than previously anticipated. This news is particularly troubling for those in the market for a home or other significant purchases. Rising interest rates will mean higher mortgage payments, making it increasingly difficult for Americans to afford to purchase a home. As a result, many will be forced to continue renting or living with family, hindering economic growth and stability. In addition to the above, the Fed warned that restoring price stability will likely require a restrictive stance of monetary policy for some time. In other words, the Fed will need to maintain high interest rates for an extended period to control inflation. While this may be necessary, it will also have a negative impact on the economy, as high interest rates will discourage borrowing and investment, slowing economic growth. The Fed's admission that faster tightening is warranted if the totality of the data suggests it will only compound the negative effects of high interest rates. While the Fed's goal is to reduce inflation to a sustainable level, its actions may have the opposite effect. Higher interest rates will not only discourage borrowing and investment, but it will also increase the cost of borrowing, making it more difficult for businesses to grow and hire new employees. The situation is made worse by the fact that many Americans are overspending, using easy credit and loans to purchase things they want, not just what they need. Credit card companies are taking advantage of this by charging exorbitant interest rates of up to 25 or 26% on credit card debt. As a result, many Americans are only paying the minimum payment, further exacerbating their debt and creating a situation that could take decades to overcome. In conclusion, the Fed's recent admission about the state of the economy paints a bleak picture for the average American. Rising inflation, higher interest rates, and overspending are just a few of the factors contributing to the dire economic outlook. While the Fed's actions may be necessary to reduce inflation and restore stability, they will also have a significant impact on the economy's growth and the average American's financial stability. As such, it is imperative that Americans remain vigilant and proactive in their financial planning to ensure their long-term financial well-being. Thanks for tuning in to Market Meltdown TV. We hope our expert analysis, news updates, and practical tips have helped you stay ahead of the curve in today's volatile market. The mainstream media will never want you to stay informed, so if you found this video helpful, please hit the like button, subscribe to our channel, and share with your friends and fellow Americans. Your support helps us bring you even more valuable content. Remember to hit the bell icon to get notified when we release new videos. Thanks again for watching, and we'll see you in the next one.